What's up YouTube? My name's Nick. Welcome to Mystery Money. On this channel we talk about all sorts of topics that surround money. If that sounds like it interests you, hit that subscribe button below so you don't miss any posted videos. And if you get value from this video, I appreciate a thumbs up. In this video I'm going to go over a checklist of things you need in order to start a trucking company. This is taken from my own experience, and this is exactly what we did when my brother and I started our trucking company. So on this checklist are the things you absolutely have to have in order to start a trucking business. One is you're going to need your CDL. You're going to need your commercial driver's license in order to drive a big rig. I don't have it, my brother does. I run the QuickBooks and all of the financial portion of the business, and he drives the trucks and runs the drivers and schedules all that stuff. Number two is the truck. The truck is going to be your single biggest expense that you're going to have starting any type of trucking company, whether it's leased to a company or you get your own authority, whether you lease a truck and only pay monthly payments, or you buy a truck and you have a down payment and then you're basically paying that truck off over time. It's still going to be your largest expense. With a lease, you're going to have a down payment and then payments throughout the lease. And then with the purchase, you're going to have monthly payments, but you're also going to have, most of the time, you're going to need a down payment of some kind when you start out. When we started our business, we purchased a 2014 International Pro Star with a Cummins engine with 367,000 miles on it and a tri-pack APU. We paid $54,000 roughly to buy that truck. Now, buying a truck, you can range in price all from, $15,000 truck that you buy online or Craigslist all the way up to a brand new, let's say an International is going to run you around 120. If you go for the Western Star, it's probably going to run you 154. And that's not really a bells and whistles, probably no APU, just straight truck. But you can still get a nice truck for that price point. And then if you go older, the sky's the limit. You can buy, a 2003 W9 for 80 grand. Something like that. It all depends on what was done to that truck, the overhauls, things like that. But that's going to be your biggest expense by far when you start out. Number two, you're going to need insurance. Like I said, our company is leased on to a carrier. We carry bobtail insurance and we carry comprehensive and collision. Basically, those are the only insurance costs that we cover. The carrier covers our liability insurance. Bobtail covers you when you're driving that truck not under load or not being paid by a company to haul. So if that trailer is not attached to our truck, our bobtail insurance covers that truck in the event that truck would be in an accident. And collision and comprehensive obviously is going to be if your tree falls on it, that's going to be your comprehensive, or if someone backs into you, those types of things. So our insurance runs us roughly about $9,000 a year, and that's for 3 trucks, only bobtail and physical damage. If you grow your own authority, I can't speak to experience because I've never had our own authority, but from what I've dealt with other small businesses and small business trucking, it's anywhere from $10,000 to $15,000 per truck for that full liability insurance. The number 3 thing you're going to need starting out is going to be working capital. You are going to have a lump sum of cash or a line of credit to begin because you're going to have breakdowns. You're going to have initial costs. Some of your initial costs starting out is you're going to have to pay the day you buy that truck, you have to register that truck. If you get an apportioned plates, you're going to have to pay anywhere from $1,600 to $2,500 for the registration of that truck, depending on your state. You're going to pay the maximum amount of mileage, whether you run interstate, intrastate, whatever. The full anticipation of that truck every state. Now, the second year, when you renew your registration, they're going to calculate it by mileage, and you'll pay per state and all those things to get that sum, but that'll be in your second year. So that's going to be an upfront cost. When you buy the truck, the month after you own that truck and put it in service, you have to pay a $22.90. That is your heavy use tax for the year, and it's $550 per truck with whatever processing fee. We go through truckdues.com. They charge us $7.99 per truck per filing. Let's say 3 trucks is $24 a year just for the file. That's for them to file with the IRS to get your Schedule 1, and then it's $550 per truck that goes to the IRS that they debit out of your account. So that's your second cost. You're probably going to have a down payment for your insurance. Most insurance companies are not going to have you broke it out under 10 payments or 12 payments. They're going to want 25% up front and then the rest over the 10-month period. So you're going to have that upfront cost. You're also going to have workers' comp insurance if you plan on hiring employees. And I know there's a lot of advice out there to not pay through payroll or W-2, but instead to hire them as 1099 contractors. And it gets really iffy when it comes to the IRS. Right now, they're targeting trucking companies that are declaring 1099 employees and making sure that they're actually 1099s. Because if you look at the regulations with the IRS, a contractor of a contractor is an employee. So in our instance, we're leased onto a company. We are a contractor to that company. They pay us. So we have employees that we pay. It's a mix. Some drivers want that extra cash, but the problem is then they have to put back for their taxes, and a lot of people can get in trouble if they don't put that money back. The other side, they like the fact that their taxes are withheld, so they don't have to worry about it. When I met with a CPA when we were starting the company up, he said, if you're gonna have employees, W-2 them. He said the fine and the fees associated with miscalculating, misclassifying a contractor as an employee or vice versa is far more than you're gonna pay in insurance premiums. Now, that being said, insurance premiums and workers' comps for trucking is ridiculous. When we first started out, paying roughly 15 cents out of every dollar for workers' comp. Now, when you sign up for workers' comp, you have to say how much you think you're going to pay your employees over the period of a year. And when we started out, we really lowballed that because we say, you have to come up with a down payment. Well, we saved on that, but at the end of the year, when they do your audit, they came back and they said, oh, wait a second, you said this and it was this. Now you have to pay this big lump sum. Now, thankfully, we changed companies and we actually cut our workers' comp in half from where it was. And what I've been told is if you don't have a claim over 3 years, 4 years, that premium can go down. So I'm looking forward to that. But that still runs us about $942 a month for workers' comp. Now we have technically 2 employees covered because one is a family member, so we don't have to cover workers' comp. We pay occupational hazard through our carrier for him. But either way, I estimated at roughly $180,000 in salaries for 2 people for a year, and that's what we pay. It's about 9 something a month. And we had to have an upfront payment when we first signed up. And typically they want 10 to 20% down for that, similar to insurance. If you plan on running a lot of toll roads, a lot of highways, I know there's ways you can get around it. And if you run back roads and things like that, sometimes you can get around it. But there's a lot of times it makes sense to use interstates because you're delivering loads faster. And if you're on a time crunch with your carriers, you need to get those delivered. So for our company, 3 trucks, it runs about $1,000 a month in tolls. Now we use Pre-Pass, and we have Pre-Pass Elite, which bypasses the weigh stations also. That we use our DOT from the company we're leased to. But that helps my drivers not have to, most weigh stations they can blow by. And it has a little dashboard. I'll show a picture here that shows how much you save in fuel and bypassing and things like that. But in order to get a pre-pass, you have to give them 2 months of anticipated tolls. So if you are, let's break it down per truck. Let's say it's $300 in tolls. You're going to have to give them $600 that they're going to hold for the life of you having that pre-pass, and then you'll have to pay monthly. It's like an escrow account that they hold. And we've got caught up a couple times where I've got another invoice and they're like, oh, we're going to hit your card again for an additional escrow account. So just something to be mindful. The one thing I like about it is that my drivers don't have to carry cash. So those tolls just go right on. I can see kind of what the tolls are and anticipate them, and they bill whenever you hit that threshold. So let's say it's 2 months. Your threshold is $600. Whenever you hit that $600, they're going to hit your credit card every time, and then so it could be, depending on how much you run, it could be a couple times a month, may only be once or twice a month. If you run a lot in New York, a lot of bridge and tolls and tunnels and things, it can add up really quick. Figure 3 trips across George Washington Bridge at $100 a pop. That's $300 just for 3 trips. And then to service your truck, you're going to get, depending on how many miles you run in each service, again, that's going to depend on age of your truck, age of your engine, type of engine, things like that, what the manufacturer recommends. I have older trucks that we do it every 15,000 miles. And then on the newer trucks, they're saying 20 to 30,000 miles, but I think we're still keeping around 20, 25. It depends on that. But that price range is going to run you anywhere from $250 for a basic PM, on certain engines, depending on a TA, Flying J, whoever has a special on, let's say, the Cummins or the international engines or Cats or whatever, $250 to, let's say, $500. Now, we get PMs on each truck probably about a month and a half. Every month and a half, each truck gets PM'd. Now, again, I speak to working capital because if you buy an older truck or newer truck, you could have breakdown issues. What are you going to do to, 1, pay for the breakdown, and 2, supplement your income while your truck's in the shop, because you're actually double dipping in the loss because you're losing whatever you pay the shop and you're also losing whatever money you would have gotten coming in. So that's something to think about ahead of time, is have a good cushion of money to pay if you're a single owner operator, and you're running your own truck and you're paying your own bills, how can you pay for your bills at home while your truck's in the shop? Do you have enough assets or cash to cover those expenses? Is your spouse, is your husband or wife working another job while you're driving to offset those costs? Because you can get behind real quick. Like I said, in our first truck, I think the first year we spent $25,000 in repairs, and that was towing, just any other repairs, any things that can happen, injectors get stuck, roadside assistance, if you got to break down in the middle of the night, all those types of things add up over time. And we ended up financing on a credit card, and I'll throw a link to the 2 videos I do for the 2 business credit cards we use, Chase and Capital One. Have that extra cushion. Before you start out, have a cushion of money set aside, even if you have to wait 6 months or a year in order to get into this industry, to buy your own truck. It's worth it in the long run. I've seen so many businesses that I've helped in the past that they bought a truck with every dime they had, that truck broke down, and their whole world just spiraled. They couldn't pay for fuel to get that truck back on the road to pick up their next load, because they were tapped out with the expenses. So that's what I'm saying. I'm not saying it's not worth it. And I know, again, my brother's the driver, and I get satisfaction knowing that our company is paying his salary and we're providing jobs for 2 other guys, and they're great guys to work for us. Like I said, I run the QuickBooks, but there's a lot of pitfalls, but there's also a lot of advantages. And hopefully in the next 3 to 6 months, we'll see those advantages now that we're back from COVID and all that other crap. So if you like this video, give me a favor, give me a thumbs up. If you have any questions or comments, drop them below, and let me know what type of trucks you own or what type of fleet or what you're looking to get into. And if there's anything else I can cover, this is our 3rd year in business, so I don't know everything, but I can at least share the knowledge I have. Again, thanks for taking the time to watch this video. Until next time, have a great day.